Hi, it's Dave. Welcome to episode 287. All right, today I'm joined by Emmet Peppers, and we got a full lineup here. We're going to talk about the markets. We're going to be talking about Tesla, competition, full self-driving, and just a bunch of topics that viewers and followers have asked us in the recent days. So anyways, welcome, Emmet. How are you doing?
Doing great. Yeah, great to chat with you, Dave, as always. I hope you had a good camping trip and yeah, looking forward to go through a variety of topics with you tonight.
Yeah, I had a great time camping in Texas. Actually, has surprisingly actually fun camping. Actually, it's been a surprise. Solar roof update. Last time we talked to you guys, you were getting your solar roof installed. So is it finished yet, or what's going on?
Yeah, it's like a 2 to 3 week process altogether. The
Hmm.
first week was like tearing off the roof and sort of prepping it. And this week they're starting to install the glass um, on top of the roof, I think, and they're finishing it up next week, I think. But today they finished putting in the power walls. That was like a 2 day process, and I'm psyched. I have 6 power walls now. I had two at
Awesome.
my last house. Now I have six. I was like, I'm gonna re-up a little bit on the power walls now that I can. Just if
Yeah.
I need to go off grid or something one day, I could.
Uh-huh.
So yeah, I'm excited to have all this the new Tesla solar roof, and I heard that they just raised prices for the solar roof. I was listening to I read an electric article or something, and it mentioned that the solar roof prices were all just kind of increased by like 30 to 40% or something, which is a pretty big increase. So I got
Yeah,
in before that.
I know. So do you know what's the size of your solar roof? Like how many kilowatt
Uh,
hours?
I think it's about
Okay.
18 kilowatt hours or something is the quote I got. So yeah, my last one I think was like 11, I want to say. So
Hmm.
this is quite a bit larger.
Okay.
Yeah.
And your last one, was it a version 1 or 2 solar roof?
Oh, it was the first
First.
version.
Okay.
Yeah, it was. I was like the first, one of the first paying customers in like the Northern California area. So it was like the early version.
So in this version 3, have you noticed any differences on like how they install it or anything?
They definitely know what they're doing. I mean, the first time I got it, since I was one of the first, the roofers were like learning on the job with me, and so it took quite a bit longer. Plus, there was like rains in the middle of it, so I had this pause, and it was like a couple month process
Oh,
because
wow.
they had to stop a couple times for like a week at a time because of the rain. But this time it's dry weather for the next, couple weeks, so they won't have to stop. I think they can just work straight through. It should be more done quicker. I mean, the crew is a little bigger, and they seem like they know what they're doing. Like
Yeah.
they've done this type of
How
thing
many people
before.
are on the crew?
It looks like there's anywhere from like 6 to 10 people here at a
Wow.
given time, all working at once, like standing on top of the roof, like
Hmm.
doing like, there might be 4 people standing on top of the roof and 3 or 4 people or 5 people on the ground doing some stuff or handing stuff up to them or prepping stuff to bring up there.
Yeah. It's interesting because I think the price increase, it kind of, I think, is related to probably the amount of people on the job. You're talking about
Hmm.
6 to 8 people for 2 to 3 weeks. I was listening to
Yeah, it's a
another guy
lot.
in Denver. He got his solar roof installed. There's like 20 people team for like over a week or a week.
Wow.
And so it's like a lot
Wow.
of, it's like intense. It's like you can get a normal roof installed in like a couple days, but the solar roof, it
Yeah.
takes a while. So it's probably one of the reasons why they increased the price. Yeah, I put in an
More
order.
laborious.
Yeah, I
Yeah.
put in an order last week for the solar roof. I'm
Hmm.
not sure if I'm going to do it, but it looks like I might get locked into the lower price actually. So,
Oh
anyways,
yeah,
yeah,
lucky
yeah,
you. You should do
yeah,
it. Yeah.
yeah. So
Do it,
we'll
man.
see.
Get that price.
Yeah, yeah.
Yeah.
You ordered a refreshed Model S. So have you gotten any word on that yet?
No word on that. It's obviously not coming at the end of the quarter, so
Yeah.
I'm sure I'll get it. Some update on that soon. And it's all right because I saw Elon tweet recently about seven-seater, and that wasn't an option when I ordered it. So I'm gonna probably call and see how I can update my order to have the 7-seat option because, I have little kids, and that rear-facing seats
Mhm.
in the way back are really helpful for little kids. So yeah, I'm gonna. So it's all right that it's delayed a little bit. I'm not in some
Mm.
huge rush. I'm just trying to get the latest
Yeah.
Tesla product with the differences and continue my my investment research on the product, so to speak, to make sure it still is the best by far. If there
Yeah.
was something with it that I was like, well, this isn't that much different than my old Model S, then I'd be like, maybe this, that type of data point is important to me to be confident that the product is still the best by a lot.
Yeah. For Q1 deliveries, I mean, are we assuming that they're not delivering any refreshed Model S's or X's, or do you think it's just limited quantities?
I mean, we're at the end of Q1. I mean,
Yeah.
I think we're recording this March 30th. Tomorrow's March 31st. We haven't heard of anyone getting delivery,
Yeah.
right? I
Yeah.
mean, I haven't heard of that. I haven't been on the forums like I used to, so maybe there's a few people. Maybe I'm wrong. Maybe some people have gotten it, but
Yeah.
doesn't seem like it. What do you have you heard
Yeah, I
anything
haven't
about
heard
that?
much. It seems like, I mean, you being in the Bay Area, with the order, it seems like they would go to the quickest, the people
Yeah,
closest, So it seems like it's
yeah.
going to be not many, if at all, any. What's your expectations for Q1 deliveries? Do you think they'll come in
Mm,
pretty soft because, you have no
yeah,
Model S and no Model X's refreshed
yeah,
versions. So, I mean, you only got Model 3 and Model Y and,
yeah.
Shanghai and Fremont. So what are your thoughts?
Yeah, I think it's going to be underwhelming. I think that's halfway priced in already and partly responsible for some of the drop in the last week or two. I think there's not really any excitement. Like, every other quarters, everyone's like, oh, excited. It's going to be like 200,000 or it's going to break. There's no one's estimating over 180,000, for
Yeah.
example, and like
Yeah.
at the beginning of the quarter, I would have guessed 180,000 or 185,000, but now I'm thinking like, it might be the 150s or something. I feel like it's going to be like, I haven't even heard of Elon sending one of those end of quarter emails this quarter that he has in the past to kind of rally the troops. So I could see it being a low point and, things getting better from there, but that might already be priced in. It's hard to know. I
Yeah.
mean, I know lots of people put their estimates. Troy put I signed up for his Patreon,
Hmm.
which is subscription, which is helpful to him. But also he sends you like an email as part of anyone who's a Patreon gets an email a few days before he posts on Twitter of what his estimates are. And he's a real expert on that stuff. He's not usually more than, a couple percent off, but I think he might even be overestimating it this time by a little bit. That's my guess.
Hmm.
What do you think? What do you think
Yeah,
about that?
I'm torn on this because on one side it's obviously no S and X is a big thing because that's like maybe 15,000 or even more.
Yeah,
It could be 20,000
yeah,
vehicles, high margin
yeah,
too. So
yeah.
it's a bit concerning. But on the flip side, you didn't have the shutdown at least in Fremont because of the chip shortage last that long. So it was a minor shortage, and then Shanghai is up and running pretty strong, right? There's no rumors of downtime. So yeah, I'm looking. Like I think everything is possible. It could come in below or on or a little above. I don't expect anything dramatically like way above or way below. It's going to come in as long as we haven't heard of really terrible news so far, which we
Mhm.
haven't. Do you think if Tesla underwhelms and delivers, let's say, really low, like 150,000 vehicles, and the stock drops to, I don't know, 500 or less, would you do anything options wise?
Yeah, I'm really thinking about that hard. It's hard to decide like, okay, if it's really underwhelming and the stock drops to like the 400s fast, for example, within a couple days, which could happen, but you know, I'm not saying it's probable. I just see it as a possible scenario. Um, but if that happened, it's hard to know, is that the bottom or is an underwhelming Q1 earnings release, going to be a lower bottom into the 300s temporarily, right? And I don't think that would be the case. Anything's possible with the macro environment, with all these growth and tech stocks taking a big hit lately. It's almost like a bear market just for the growth tech stock, sector, right?
Mm-hmm.
And that's what we kind of play in the most, or that's what a lot of your listeners, I think, are heavily involved in too. So, I can see a scenario where the stock temporarily goes pretty low, and that would be the ultimate buying opportunity. So I'm kind of preparing myself, actually get into some options. I was looking today, active brokers with uh, the long three options. That's the farthest. and the 1,000 strike price is what I was looking at, and it's pricing in, I think, only like an 87% chance that the stock is not going to be above $1,000 come March 2023. 87%,
Wow.
right? So it's like only a 13% chance that's going to be above 1,000 by then.
Mm-hmm.
I mean, if it was 50%, I'd be like, that maybe 50%. I don't know, but
Uh,
87, that seems like kind of strong. So I'm thinking, it's a good risk reward bet right there to like, look at some of these 2 year out options for like, a strike of a, new all time high, strikes of new all time highs, and it's not a guarantee, obviously, but
yeah.
if the stock goes to like 1,500, yeah, I think they were like $150 or something. That's what the price was for the premium. So if the price went to $1,500, you'd make like 3.5 times your money. It's almost like just buying the stock. I think if the price went to $1,500 from 600, you're making 2.5 times your money. So it's not too much different. But if the price goes to 2,000, which is like a 2 trillion market cap at full self-driving, takes off, which is a real possibility, obviously. I'm not saying that's likely, but I'd say it's much more than 13% chance. I think it's like 25% chance at least, maybe 40 or 30 or 40% chance even, based on all the analysis everyone's doing on it. So if that happened, the stock could easily get to 2 trillion plus in 2 years, and then you're looking at a 10-bagger return, right?
Mm-hmm.
And so to me, that kind of is an interesting risk reward possibility as why the stock's where it is now and goes lower. If the stock was at like $800 or $900 again, if I looked at those numbers, they might not be as appealing to me. But now that we're back towards 600, it looks like it's an interesting play potentially. But I'm not saying it's probable.
Yeah.
Like there's a good chance you lose your entire premium. So I wouldn't bet all my account on that. I would put like a portion of my account into that maybe.
Yeah. Yeah. It's interesting. I mean, if the stock drops even further, let's say poor deliveries or poor Q on earnings, then those odds will go more in your favor.
Absolutely.
Yeah. And those March 23 leaps. Yeah.
Look even better.
Yeah. Well,
Yeah.
probably, maybe he'll go down to under $100,
Yeah.
Yeah.
Yeah, that'd be incredible. Because you got to think this full self-driving, no matter how skeptical, no one knows what the heck is going to go on. Like as much as we talk about it, the people that are like bullish on it, they don't know for sure. And the people that are bearish on it, like, oh, it's nothing, they don't know for sure. Like no one really knows. This is like uncharted territory. What if this robotaxi thing turns out to be the real deal? There's a significant chance it turns out to be, there's also a significant chance it doesn't pan out at all, really. Maybe regulators stop it or whatever. It just doesn't pan out for some reason anytime soon. But on the flip side that it does, you have tremendous upside potential there. And that 13% chance just seemed, priced into the options is way off. That's like a, definite edge in my opinion, but it doesn't mean you're going to win. It's kind of like a calculated risk that's worth taking in my opinion.
Yeah. For those who haven't watched a ton of our other interviews, so Emmet's talking about the Interactive Brokers Probability Lab. I'll put a link in the video description where it kind of gives you the odds of various stock prices in the future, what the market is pricing into it for options. And then we're talking about March 23, 1,000 strike Tesla leaps. And so what that means is they're option contracts where you could pay a certain premium, let's say $150, and you can have the right to purchase Tesla stock at $1,000 in March 23. So the benefit is you don't have to pay the full $600 right now. You pay a smaller premium, a smaller price for the leverage to control more shares later, but you'll have to if you want those shares later, you'll have to exercise them at that 1,000 strike price, or you could sell them beforehand. Yeah, fascinating. Yeah, it's one of the things I've learned actually talking to for many episodes.
We talk about this type of stuff so many times. Yeah,
is I'm starting to really get the idea of the 10-bagger idea, where you're looking for really kind of this probability mismatch where you're saying, hey man, this is way off, but then you're also looking for that bridge where it's going to give you that 10-bagger opportunity, where it's a really outsized thing. And then you'll pair that with some risk management where you're not going to go all in. You'll pair it with, a portion of your assets. So if it goes the wrong direction, it's not the end of the world. Um,
Yeah.
yeah, so this past week we had news of this hedge fund Archegos doing this. Basically, they blew up. They got margin called. There's a $20 billion or so hedge fund, billions of dollars of assets got liquidated. Some people are scared that it could be contagion, where it's not
Hmm.
just this fund, but it could be other funds. And this fund supposedly was like leveraged up to 8 times through these swaps. And I'm curious, what are your thoughts on all this? Like, do you think there's risk
Yeah.
of it spreading? Do you think people are over leveraged?
Yeah.
These funds on Wall Street. What are your thoughts?
Yeah, I think there's a lot of fears of that, obviously, but all the reports I've read, I haven't taken a huge deep dive into it like some folks probably have, but from the Bloomberg News, which usually does a good job, Bloomberg reporting on this type of thing, with prime brokerage and stuff, it sounds like it's kind of a unique anomaly, this particular fund, and the usage of equity swaps in a high risk way using multiple prime brokers, and they didn't have to report as much because they were operating as a family office or an unregistered, not as a registered fund or something. So it was sort of a unique scenario, but I'm not a fan of equity swaps. I'm familiar with them. They're not exchange traded, so you have counterparty risk. Number one, with the prime broker you're using, and number two, I don't think they've flown under the radar with the SEC and for so long, and regulators, I guess globally, but it just seems like a way to get extra leverage that the regulators don't allow anyone else to get. If you're not a big enough hedge fund, you can't get that type of equity swap agreement set up with the prime brokers, right? It's called an ISDA agreement. It's an acronym for something, but you have to be pretty big to get that type of agreement with these prime brokers. And then number two, so you get this special leverage that no one else is allowed to get because you're a big enough client. And number two, you're really using it as almost a tool to evade taxes, in my opinion. A lot of these institutions, like that's the main attraction: leverage and tax evasion. Those are two of the main reasons I think people get involved, like these institutions. And if you're an institution trying to maximize your investors' returns, if it's available, why wouldn't you do it? Obviously, right? So it's really up to the regulators and the rule makers to figure out a way to outlaw it. And hopefully, the SEC is taking it more serious now with this event to say, hey, we need to finally put a stop to these, swaps. It's not, a fair ball game, and it's not a good tool. It's not good for the system, in my opinion.
Hmm. Yeah, definitely. It seems like, with leverage, especially like 7 or 8 times, if things are going within your realm of expectations, it's fine. But once it kind of goes over, you know, into this uncharted territory, then you're not prepared for that, and you could just blow up, all of your assets. And this is, it could be for a fund, it could be for an individual account. It's just like
Yeah,
oftentimes I think people aren't really in touch with kind of the things that they're not expecting, but they're real
yeah,
possibilities. I mean,
yeah,
even with Tesla and a lot of growth stocks, people like, I think they under or they minimize the risks involved. And sometimes we talk
yeah,
about, hey, Tesla can go down, a lot. And we're, we have skin in the game. We're not saying this because we want it to go down. It's not
yeah,
like,
yeah, yeah.
it's something that we're betting or we're going to profit from at all. We have a
Hmm.
lot of exposure, but it's the reality. The reality is, yeah, like stuff like, like inherently risky stocks can go down as much as they can go up. So last week we interviewed ARK Invest's director of research, Brett Winton, across a
Hmm.
bunch of topics. I'm curious to hear. I haven't even talked to you about it after our interview. So what are your thoughts? Like, what were your takeaways? After the interview.
Super bright guy. I mean, that guy, I don't want to say it, but I suspect he could be, the brains behind Ark in a lot of ways. He knows everything. It seems like there, like he knows all the stuff as good or better than Kathy, based on the interviews I've seen her do. At least as good. I'm not saying Kathy knows all the stuff very well, but this guy Brett, he just kind of blew me away. I mean, we grilled him on some things Tesla and asked him about other stocks, and he just knew everything really well. I was just super impressed, and a good contact for us to kind of stay in touch with over time. And yeah, I mean, if there was a firm and if I was setting up a hedge fund or another hedge fund, I would try to recruit that guy. That guy knows his stuff, and he knows all the right people probably to talk to get answers for things by now. And,
Yeah.
I like I like his insight on things like he was talking about, a couple things that he brought up about Tesla and self-driving is like, maybe some bubble cities will be like a Waymo self-driving city, and you're trying to compete with Tesla in another jurisdiction in the US. And I could see that scenario playing out. Like Waymo's like, no, we own Arizona, we're locking down Phoenix and Scottsdale or whatever, or Tesla being like, all right, fine, we'll just handle, Flagstaff in LA or something, who knows? But also I liked his opinion on Japan, and it brought me up, where he was saying, he reminded me that Japan is such a nation. There's so much national pride with their business, I think, in Japan, and there'll be some national champion in Japan that is the self-driving king or whatever. I forget the exact terms he used, but it reminded me a lot of this Toyota rumor we heard of today, which made me think like, okay, Toyota is almost maybe a proxy for the Japanese government that kind of wants to, they see Tesla as the dominant technology of the future, and they don't want Tesla to kind of like take over Japan. So they'll make their biggest automaker, Toyota, who's probably got all kinds of inroads to the Japanese government already, partner with Tesla in some way that Tesla, agrees to, so that Toyota is sort of within Japan remains the national auto champion product. That's my opinion, and that kind of, I think Brett's discussion on that point helped kind of me think that way about it. Mm-hmm. I don't know. You probably had some interesting takeaways too. I didn't talk to you about it. I mean,
yeah,
I know you were impressed with him too.
Yeah,
right?
like actually, I was blown away actually by the conversation. I listened to several of his interviews in preparation, and he really, struck me as a very sharp, really thoughtful guy. But when I actually was able to, pose questions across a bunch of topics, the guy, he really knows his stuff. Like, it's as if he's the guy researching it. It's like,
yeah,
you would expect the ARC's director of research to kind of have a hands-off, like have all the analysts cover each company, and he'll just kind of oversee it. But when I'm talking with him, the guy's like, he understands like the bull thesis and the fine points of every one of his investments. And to the extent that I'm like, wow, this guy is like really deep in it, And especially like his analogy or his example of the Tesla or the autonomous driving market being, it could go up to 30 trillion miles. And even if you get, let's say, 5 cents per mile profit, that's like, $1.5 trillion of profit, and you give a 20 multiple off of that, that's like 20 or $30 trillion of market cap. And to think like that, it's like, it takes a different mind, and I was also impressed by how he was saying how they don't care per se if the companies, think that it's not possible. They're the ones to like, they're just paying attention to what is
their
likely.
own tunnel vision job,
their own thing. And then Elon Musk will, take their stuff and give it to the engineers and tell them to make it happen. I was like, what's going on here? It's like,
it's an interesting angle.
Which makes sense to me. It's like Elon, he follows like a lot of these ARC guys, and gals, and means he respects them a lot. And I would imagine their research has really, impacted and shaped some of his thinking.
Probably helps reaffirm his thinking. Like, I knew this could happen. ARC agrees. These engineers, each engineer individually doesn't think they can do that much better, but collectively we'll figure it out one way or another,
Yeah, definitely. But that interview, I'll link it in the video description. ARK Invest Brett Winton is an interview I'm going to be watching, over at least 1 or 2 times just to kind of get a better sense. And I'm going to do a deep dive on this guy. He doesn't have that many interviews out on the internet. That's the thing. I wish he had like hundreds so I could really, dive into it more. So we got some cool stuff. We have some Twitter follower questions. Will Chan says, thoughts on the expected weak Q1. Is it discounted currently in the stock price? And how do you remain focused on the overall objective of Tesla stock during consolidation weakness. Yeah, I was going to ask you this. Like, Tesla's, it's dropped significantly from 900 down to like 600, even lower. That's like a 35% drop. You see your portfolio assets drop, and like, does it mental you at all? Or are you just kind of, keeping your eyes focused on, potential growth in the
Yeah.
future?
The only real mental part is, I keep my eyes on the future, like long term, this is, going to be the biggest company in the world. I keep my 2030 as my kind of conservative estimate, but that could happen in 2 or 3 years if the self-driving car, robotaxi gets pulled off, the way some people think. So, but so I just try to keep my eye on the prize long term. The only thing that sort of phases me on is we've talked about before, plans for selling like out of the money, weekly calls or something, like the lower it's going, like I don't want to sell these out of the money weekly calls as it's dropping like this, because there could be another like
Yeah.
100-point day where it just pops up 100 points and you sold your calls right before that and you're like, oh crap, what am I going to do now? So I'm nervous about that, so I'm not really doing that type of strategy until like it's kind of creeping back up, I think, then I might consider it. But during these drops, it's definitely, you look at your account every day and you see it dropping 5% a day or whatever. You're like, holy crap, day after day, like it's just not, it felt like just getting punched by a punching bag, and you just have to remember, like, long term, this is what I signed up for. I didn't sell my stock. I could have cashed out anytime and done other things, but I'm signed up for this, and I have the kind of the financial security at this point where I don't have to rely on another job, and I just have to watch my net worth kind of fluctuate drastically, go up or down 50% sometimes over the course of a few weeks, based on Tesla. So it's stressful, but I know this is what I signed up for, and in the end, everything will be fine, and Tesla will be the biggest company in the world. I'm very confident still of that.
Yeah.
I mean, you must have stress too. I know you've talked about selling some covered calls from time to time. Are you still doing that even when it's going down like this, or are you kind of waiting until it stabilizes or goes up?
Yeah, so I sold, some covered calls, kind of like way out there, like 900 strike for a couple weeks, like weeklies. And then this past week, I was trying to sell some, but then I'm looking at it, I'm like, I'm only comfortable at like kind of near all-time highs. Like if there's like I want to sell like way out of the money, maybe like $200 out of the money at least, right?
Yeah.
But I'm looking at it right now, and it's like I'm getting pennies for the stuff, and I'm like, the lower it goes, and then there's deliveries also, coming out potentially even on Friday, So I'm like, who knows what's going to happen to this
Plus,
stock?
it's like Biden plan that some people, like, I know Gary Black's talking it up, and some people are saying the market's gonna be, excited for this, potential stimulus. So you don't know. There's always a catalyst, right? So you're kind of like nervous about that. You said about the stock coming back to your strike price.
Yeah. So I'm just like, I think my angle is like, I really want to hold the shares I have, for a very long time, to think that they can be called away and I'll have this tax hit and I might not ever get, the same amount of shares, like all that, it's definitely, there's a cost, to that, picking up the pennies, I guess. But yeah, I'm trying to get Gary Black on the show. He seems to be willing to come on, but he wants to have some, talk about some current news and stuff. So we'll see. I'm going to pick his brain. I think he's one of, for those who don't know Gary Black on Twitter, he's like, I'm getting to understand a lot of his thinking nowadays. And I put together a robo-taxi kind of forecast, kind of a one-sheeter. And he actually really was able to pinpoint the assumptions behind that. And I was actually super impressed because actually before I released it, I was going to actually do a bunch of like disclaimers, like these are the major assumptions, but I kind of left that out. I was like just saying, okay, here's a possibility of an aggressive bull case. But Gary was one of the ones who was able to clearly pick out what are the key assumptions, which is basically like how the demand has to be there, the utilization, right? And then also the competition, like who knows, they could catch up, they could provide a similar service, et cetera. And there's a bunch of other kind of factors that everything rests upon, you know, and there's a lot of uncertainty to some of like the bull case, even that, you know, I shared. But yeah, I think it's always helpful, I think, to have people who from different angles and backgrounds to be able to, you know, share with the community. But I think yeah, definitely interesting insights.
Yeah.
I mean, what are your recent kind of thoughts on full self-driving and its timeline, its rollout, competition? Are competitors going to catch up? Is this thing going to be released anytime soon, or what are your thoughts?
Yeah. No, I'm really, I was reading, for some reason, reading the comment section. Sometimes I go through the comment sections, just kind of quickly peruse some. I never can get through all of them, but I look through the comment section sometimes of your videos after I watched them. And I watched one of your videos with James, and I think it was the one about the regulatory model where because that's what interests me the most as a concern. And one of the comments made a lot of sense. It was from someone who said they work as a regulator, not in transportation, but something else, as a federal regulator. And they're pretty sure they don't see a way that this self-driving is going to fly. Like, look what they did to Boeing, you know, and it's still not really ready, you know. And so that's just like, then I put a tweet out like a little while after reading that. And I was like, yeah, this is a big, you know, concern for me too. Like, the federal regulators, you know, they're going to be pressured from all different angles, you know, especially when there's the first tragic accident that happens, and especially if it's videotaped and the video gets to the press. You know, like, we read the headlines, that's one thing, but when they get a video of like a child being run over, imagine, right? A video of that coming and going crazy all over social media, and it's a robot car driving it over, you know, like, that's going to just anger so many people. Even, they're going to ignore statistics. So many people are so emotional. You know, you see that from politics, right? And you know, it could really pressure legislators, like, and the federal regulators to pass some law or regulation that says someone has to be in the seat all the time, you know. And there'll still be like a level 2 ride hailing network by Tesla, but that's not as profitable as like a robo taxi, right? Mm-hmm. And so that's my worry, and that could set us back years. You know, it could be a few years before competitors catch up and lobby for it along with Tesla to finally let it happen again, you know, where the robo taxis can, you know, become legal again in the US. So that's my big concern. I saw the guy, I think SMD Capital or something, SMD, he put a really good report together, and I think you commented or retweeted it, and I read it then, and I skimmed through it. I didn't read the whole thing, but I went to the regulator. He's the first person I've seen like actually spell out like state regulators, because this is, right now, it's really a regulatory thing by state, you know, it's not a federal, you know, to allow the robo taxis and stuff. And so he listed like the friendly states. It was the first time I've seen like, you know, detailed analysis state by state, which was really cool. And so I liked seeing that. And it'd be nice to find out, like, we have a specialist for delivery, a few specialists, or a couple specialists for financial statements, a couple people, specialists for, you know, China, what's going on the ground in China with Tesla or the batteries, or James and a couple other people with neural networks. You know, it'd be nice to have a specialist that works in the regulation industry, or that you spent a whole career as in NHTSA or something, that also is a huge fan of Tesla, that can dive deep onto this stuff with us. You know, maybe we can find out someone like that to like have a deep dive discussion with someone like that to kind of get that perspective, to see what the what the probable or likely outcomes could be from such a drastic technology, you know, coming out all at once. So I'm just concerned about the regulations, to be honest, being overzealous off of some crazy crash.
Yeah.
I remember we saw that with the Florida crash. Imagine, would you remember back in 2013 or 14, or maybe it was 15, when they had autopilot initially, and there was the guy that he had autopilot on, he was watching like Harry Potter allegedly, and his car flew under a truck and he got decapitated, and the car kept going for a while. And you just read the description. You didn't see any videos or pictures of it, but you know, something like that happens, and worse, and you have videos of it, you know, it would just create all kinds of outrage. I mean, don't you agree? I mean, people are just irrational when it comes to emotions.
Yeah. So I look at it. So I acknowledge that risk, but on the flip side, the way I look at it, let's say full self-driving works and it's actually pretty good and it gets better over time. What's going to happen likely is the take rate of people purchasing the full self-driving option is going to increase pretty radically, because up until now, like there's so much, media coverage and people thinking it's vaporware, it's never going to come, does it work? Yet still, at least in the US, it seems to, 25% of the people seems to be taking it. And so if Tesla can prove that this thing works, we're talking about probably 50% take rate by the end of the year, if they don't increase their price, which they might. And then next year it can go up, to 75% or something crazy. And then Tesla starts their monthly subscription service as well. So now people have to analyze or account for a monthly subscription business, which analysts aren't doing right now, So in any case, it doesn't even matter on one angle regarding the robotaxi timeline. What's going to happen if this thing works? Tesla's margin, their profit margin is going to increase radically, and
that's true.
This is going to just like wake up people. They're saying, "Oh my gosh, wait a minute! I thought Tesla was a low margin car company. What are they doing with all this software margins, recurring revenue margins, all this stuff? It's like it's different."
That's true.
So I think even that is actually something that could start to happen in 2021. It's not actually something we need to wait for a robotaxi rollout. But yeah, I think also.
Do you think Tesla's going to make people pay attention with their eyes? Like, do you make people agree to let that front camera watch them so that they're paying attention, not like reading a book or something? Do you think Tesla's going to do that?
Yeah, I think they're already factoring in that for their beta full self-driving right now. If you're not paying attention, they're tracking you. Then they'll kick. I think they said they kicked out some people for not paying attention. I think the big kind of jump is probably for the next 1 year of full self-driving beta. Like Tesla's going to require like full attention as the system gets better.
I hope so.
Yeah, and they're going to use that camera to make sure people are paying attention, and they're going to make sure it just gets better and better and better. I don't think actually we're going to see like Tesla allow people hands off this year at all. That's not the plan. I think next year sometime you'll see kind of more limited and selected robotaxi rollout in jurisdictions that allow full self-driving, like Chandler, Arizona or something, right? And they'll go against Waymo, et cetera, to prove out, the safety and stuff. But yeah, I think the abilities of robotaxi every 3 to 6 months is going to jump so radically that after it gets to a certain point where it's like better than human driving, it's just going to continue to radically
exponentially get better.
I think that's what most people aren't grasping with full self-driving. They think it's just going to incrementally get better, which the way it works is it works off of data and it works off of compute power, and Tesla is radically increasing their data, increasing their compute power. It's just a function of their neural nets, it's not necessarily like engineers trying to incrementally, improve like hard code rules, in
that Andrej Karpathy interview. You listened to that one, right? And he talks a lot about this stuff. But the one thing that still strikes me as hard to put into the neural nets is like, how do you replicate like the body language communication, with like a pedestrian that's like saying, go ahead in front of me, and like, or if you're in the car and you're signaling to the pedestrian, like, no, you go, like there's all kinds of weird things that seem like it's going to be. I mean, I would think the neural network would hopefully get to that at some point, or, figure those stuff out, but it just seems harder for me to imagine how the neural networks can get all that stuff down too. Yeah, but I think it probably will, right? It seems like it could.
Yeah, I mean, it's the pros and cons of a computer driven car. The pro is it's always vigilant, it's always on. Yeah. Versus the human can be distracted. Everyone's looking on their phones nowadays, so it's like you have that. That's the starting point, kind of. But then, then the computer driven car though. Initially, it might actually have some glitches. So that's the dangerous part, how Tesla navigates that stage where they're not like 5 times better than a human
Yeah,
driver yet, you know, and the
the next several
glitches,
months.
yeah, the
Yeah.
glitches could seem very, you know, catastrophic, you know, and it could be actually in terms of human life. So definitely, I think it's an interesting case. You tweeted recently about listening to a podcast from a Tesla bear, Dimitris Soha, who is a fund manager. I listened to that podcast because, you know, I've got to
Yeah.
be exposed to the bear arguments.
Yeah.
And,
Yeah.
you know, he made several points that he thinks, you know, FSD is vaporware, it's fake. The cameras aren't good enough, that, you know, LiDAR is going to be needed. And he thinks
Yeah,
that,
he did mention like something like the vision isn't good enough for bad weather. You know,
yeah, it's like,
that
or the
was so
dark.
backwards. Like
Yeah.
LiDAR isn't good enough for bad weather. The vision can handle it. You know, if human eyes can handle it, so could the Tesla vision. Yeah. So yeah, there was a lot of flaws like he in his arguments. Yeah. Keep going
Yeah.
though. Sorry.
And then, yeah, he was saying how Tesla is, you know, is going to be losing market share globally, and there's competition coming with Volkswagen and a bunch of other cars,
Yeah.
OEMs. What was your take kind of after listening to kind of that bear argument?
Yeah, you know, it's tough to listen to and swallow. I'm trying to take it very seriously because this guy definitely genuinely believes what he's saying. He's not like a pretender or
Yeah.
something, you know, and there's a whole class of people that believe in that, what he's saying, right? And so it's so hard to wrap my head around. It reminds me a lot, you know, I'm not going to talk politics, but like, you know, the right and the left of politics, like the people on the right probably think like that if they're listening to someone on the left. The people on the left probably think like that if they're listening to someone on the right give an interview, you know. It's like you just have a really hard time identifying with how they can think that way, right? The good thing about this is, like, I think in politics, you know, it's hard to tell who's right. There's, you know, but the good thing about this is you could tell who's right by the market, right? So in the end, the market will be right, and we'll find out if Tesla goes back down to $60 like he's predicting, or if it goes up from here, you know, and so we'll find out over time. I feel, bad for him and his investors, you know, but that's why hedge funds, classic hedge funds like his, probably, I think they limit themselves to like no more than 5 or 10% of their fund being short to a particular name or whatever. So it's not going to destroy his fund, you know, but he seems like he's probably a smart guy. You know, there's a lot of very seemingly smart people, Michael Burry, you know, all these people are seemingly super smart that just think Tesla's vaporware, it's doom and gloom, you know, and it's sort of like the politics thing. Like you see some really smart people, but if they don't agree with you politically and you hear them talk about something, you're like, wow, that doesn't make any sense to me, you know, and you have a hard time, you know, listening to it empathetically. You try, but you just can't make sense of it almost, you know?
Yeah. Yeah.
And did you have a similar feeling, kind of like where it's just like, you just can't make sense of like how he thinks that way about these things?
Yeah, actually, so when I listened to it, I picked up a lot of, I don't know what to call it, but it's a little bit of a religious, like, kind of defined view, you know, that's concluded already something and is holding on to that view very strongly. And when I listen to stuff like that, it actually makes me more bullish on Tesla in some ways, because I'm like, oh, there's actually like a kind of, I wouldn't say irrational, because there's a rationality to the arguments, you know, but there's something deeper than that is bothering people about Tesla, about Elon Musk, and about, you know, the promises Elon makes that, you know, he's not keeping. There's things I'm picking up.
They think he's a fraud, or
exactly, yeah. And I thought that was kind of all gone, you know? So I was like, but then to hear that now again, I'm like, oh, okay, we've got some shorts, we've got some bears. And it makes me feel,
still
it actually,
a cohort of people
it actually
haters and trying to short it.
Yeah, it actually makes me like feel like, okay, the market is healthy around the stock, you know, and I expect that stuff. And it's tough to listen to more than once, just because like I prefer some type of open-minded, you know, discussion or debate. I would love for a Tesla short or bear to actually buy the products, you know, like I know there are some that do, but like typically, like if you're going to be shorting Tesla or buying millions of dollars of puts, why not at least spend $50,000 on a Model 3, you know, and drive it around for a year.
Drive around.
Yeah, you know, and try a solar roof or do whatever,
Yeah.
like try
And some of these people, though, some of these hedge fund managers are like brilliant. They're almost like, I don't want to say, idiot savants or whatever. They're almost like Asperger's type people that maybe they don't connect with reality and, real world experience so well. Sometimes they're just like mathematically geniuses in some ways, and, you know, and they're good at analysis, classical, conventional financial analysis in every way you can think of. But for things like Tesla or Apple or Amazon, for spotting those like Netflix, those types of opportunities that many of these people miss, it's like you need more than that. You need to connect with the population and at large and understand customer satisfaction, customer experience. You need to really be able to, I think, connect to the average Joe, and if you can't, then you're kind of at a disadvantage for some of the, these people like they think it's just like apples to apples comparing Volkswagen the ID4 to the Model 3, like this guy was doing almost,
Yeah.
I know, I didn't mean to interrupt you, but keep going.
Yeah.
Yeah.
Yeah. No. I mean, that definitely. Yeah. I didn't have any other thoughts on that actually, but a follower Daniel Gardner says he'd like a follow up on your Bitcoin program to buy and sell between 50,000 and 60,000. Yeah, how did that go? I think you said it was just one Bitcoin or something. You would buy 50 and sell at 60
Yeah.
and see what happens. Did you follow through
No,
or what happened with that?
yeah. In my personal account, I tried it. I bought like uh, 10 futures contracts of Bitcoin, which isn't cheap, and I was buying and selling every like few $100 in the scale trader that Interactive Brokers offers. And then got outside my range, I think on the downside, and I had bought all, 10 back. I think I had 10 Bitcoin futures, and then the Bitcoin futures contract was like getting ready to expire, and I just closed it out. And I wish I just kept it on, rolled that futures contract, because if I kept it on since then, it would have printed a lot of money because it's been between, but instead, I just didn't play that right, and I lost money on it. I didn't stick to my guns on it, and I just didn't. It was kind of like a pet project on my personal account that I didn't keep up with, and I just lost conviction, thinking like, this isn't. I don't want to be a Bitcoin trader,
Yeah.
So if I stuck with it, it would have panned out well. But it's a Monday morning quarterback.
How do the futures contracts work with Bitcoin?
Yeah, so every month, the CME has a Bitcoin's futures expiration, and you want to trade the near month because it's most liquid, and it's more accurate price reflection of the actual where Bitcoin's actually trading. So if you're trading them right now, for example, I think March expired, the March expiry expired March 26th or something like that. So the near month right now expires April 26th. So these Bitcoin futures, they're contracts on the Chicago Mercantile Exchange, the CME. It's an exchange traded product, which is good. And a brokerage that offers futures products might give you access to this type of exchange traded product on their platform, like Interactive Brokers. And so you put a certain amount of margin down. I think the CME futures, Bitcoin futures, I think it represents 5 Bitcoin each one. So I think you have to put down like, I want to say $50,000. I don't know. Brokers sometimes add margin onto it. The CME has its own margin requirement. So I think with Interactive Brokers, you put down like $50,000 or $100,000 to buy one Bitcoin futures contract, even though it represents just $250,000 notional with 5 Bitcoins at $50,000, right? So it's sort of like you're buying the Bitcoin, but you're buying a futures contract. And when the futures contract expires at the end of that month, April 26th, let's say, or whatever, then you can either roll the futures contract forward to the next near month, like May 26th or whatever, or May 25th or whatever the last Friday in May is. And what that means is when you roll it over is if you have, 2 Bitcoin contracts, futures contracts for April that are about to expire, you can sell those and immediately buy 2 futures contracts for May at the same exact time. In theory, for like close to a net zero price, but there's always a little difference for like interest and all that. And so you can keep it going if you do remember to roll it over every month at the end of the month. But if you don't, then the brokerage firm, I think they cash settle the Bitcoin's futures contracts. So what that means is they don't deliver the Bitcoin to my account because the brokerage accounts don't hold Bitcoin in them, but instead they just expire, and my P&L for, whether it's a winning or losing trade just sticks in my account as, cash. So that's sort of how that works, if that makes sense.
Mm-hmm. Yeah, it does actually. I want to talk about DeFi. Did you see that Elon Musk's tweet about, he said, don't defy DeFi? Did you
I
catch
did
that?
see that.
Yeah, yeah.
Yeah, I wasn't sure if that was like a pun or just a joke that he thought of and just threw out there. I don't know. He commented on that Saturday Night Live thing, I think right before that or a little bit before that or something. I don't know. That Saturday Night Live skit was funny. Did you see that? The
No, I didn't.
NFT thing?
Yeah.
Oh, NFT skit with Saturday Night Live. So I wasn't sure if he was just in like a playful, humorous mood because, NFTs and DeFi are sort of like connected in some way, I guess. I don't know. But you must have some. Yeah, I know you just interviewed a whole bunch of people on crypto and DeFi and all that stuff. So you're much more knowledgeable in the DeFi stuff than me at this point. What did you think about it?
Yeah, I actually think, I mean, this is just my random kind of theory right now, but I think Elon is going big on crypto. And it's a logical path actually. So you start with Bitcoin, and they bought Bitcoin like 1.5 billion cash, and then you let people buy Teslas with Bitcoin. But then you start to see some limitations with Bitcoin. Like Bitcoin is a fine store of value. It's just
digital gold. I think.
Yeah, it's limited. It's scarce in quantities. So thus, if people want it, it can go up. But to form an entire kind of alternate economic system, around Bitcoin, it's the technology, the developers, the stuff. It isn't the most cutting edge of blockchains, right? And so you go to something like Ethereum, which has more usage or more, I guess, breadth of possibilities, right? But the problem is, again, it's kind of like, they have challenges. Like it costs a lot to do transactions. They're having scaling issues. They're thinking, the next generation will solve it, et cetera. And then you have a bunch of kind of new, like maybe we call it third gen blockchains that are trying to solve kind of the problems.
Like Cardano or something.
Yeah, Cardano and others. But the problem with, all these guys it's not proven, right? And they're all trying to vie for that space. And you have Elon looking at all this, and he's like, wow, at first you think that the crypto is very mature / solid, and you just buy some coins or something, right? But the more you get into it, you realize it's the wild, wild west. Like this stuff is just getting started. And Bitcoin is actually just part of the picture. And the bigger kind of, I think, bull thesis of crypto is not store of value. I think that's part of it. But the bigger thesis is it could actually provide an entire alternative economic reality, transaction system to the physical world, and eventually, cross over and become parallel or join later. But the promise of efficiency and the promise of decentralization, where anyone in the world can be part of this, it has such a draw. And I think Elon is starting to go down that route, and DeFi is actually really far down that route. It's past Bitcoin, it's past some NFTs, et cetera. It's into kind of an economic reality that he might be seeing like, hey, there's I think his interest could grow. And I think the more we see Elon go down this path, the higher the possibility that he gets involved big time doing something big in crypto, like not just buying Bitcoin, but I don't know what it is, but either supporting a third generation like platform, or creating something himself or something big, with crypto. But I don't think this is the end of the story for crypto and Elon. I think it's just the beginning.
Yeah. Now, what do you think? This might sound like a novice question, but I feel like people use the term DeFi, the DEFI, in different notions. The first time I heard it was, I think Naval Ravikant was talking about it several months ago when I was listening to some interview he talked about. And I know there's a guy that has like a DeFi .com or some kind of company maybe called DeFi. I don't know, but am I wrong? Is DeFi like a movement of, philosophy on decentralizing money? It's not a particular company or particular blockchain in itself, is it? Or is it more of like a conceptual movement of lots of different ideas that are kind of going a little bit of a new direction in the cryptocurrency place? So
actually, that's a great question.
Like DeFi.
Yeah, it's a great question because it's actually mixed in my opinion. So it's two parts. One is it's the potential of what can happen on a decentralized blockchain of basically every financial transaction being taken out of a trust relationship where two people have to trust and there has to be an intermediary to kind of broker that trust. So it's kind of redefining financial transactions where you put your trust in a contract that's on the blockchain. So therefore it's a direct kind of, there's no escrow, there's no bank, there's no all the financial services in the industry is just kind of eviscerated because everything is direct.
So that's just like the ledger of the blockchain? Is that what that is? Or something different?
Yeah, it's a little bit different. So what you need is, and this is kind of the limitations of Bitcoin, is Bitcoin was really, their focus was kind of store value. It was more like you put you own a Bitcoin, your Bitcoin is on the ledger, it's there forever. You just need to know your digits, right, to get it. Yeah. The next generation of kind of blockchain was this whole smart contracts. Basically,
Ethereum thing.
Yeah, it's a computer program that you could put on the blockchain that once it's on the blockchain, you can't change it, but it's transparent. People can see what the program is. And so, for example, let's say you want to lend me $10,000 for a week, and I agree to pay you $10 for that thing. Typically, if I don't really know you, I can't. It's like hard to do. What do? Like you need a escrow or bank or something to broker that, and they charge a bunch of fees. And this is like multiplied billions of times across the financial world. But let's say we can make a computer program, or someone does, where it basically says, okay, so Emmett, you put $1,000 into this computer program on the blockchain. So basically, you just send your crypto into this program, and it's there. And then I will basically take that $1,000, but I will maybe collateralize it with some other assets. Maybe it's a tokenized thing of my house or something, or I don't know, it could be something else, or some other crypto I have, and I have
But you have to collateralize it with some other type of smart contract. Is that right?
Or
something related to a smart contract.
Yeah, something that this smart contract can receive into it, or another person can, let's say hypothetically, back me up,
honor
be my exactly,
guarantee
right?
You.
Yeah, but the concept is I take your $1,000 and promise to pay $1,000 plus $10 to you in a week. And if I fail, then the smart contract automatically liquidates the collateralized asset and gives it to you. So you're not at loss, right? But everything is done without a bank, without an intermediary. They've figured out how to stick it all into a computer program.
Kind of automated A to Z.
Exactly.
But you have to have A to Z all in it. Like you can't, it's like the chicken before the egg. You have to have all this stuff connected into it before it's going to really work all together like that.
Exactly. So the promise of DeFi is, in one kind of area, it's the potential that everything is going to be all linked, and you could do all these financial transactions. But you could not just do financial transactions. You could do almost everything. You could buy and sell insurance. You could buy and sell a house. You could buy and sell stocks. You don't even need the brokerage clearinghouses. It just is direct. There's like so many promises of DeFi. So that's one definition. The other angle is that DeFi is actually happening right now, but on a more narrow scale, where, for example, there's companies like Aave and Compound, which lets you get interest on your crypto, and they do exactly what I'm talking about, where you lend your crypto, and I can borrow the crypto, pay interest, but I have to collateralize it with other crypto, right?
Yeah, and it's like shorting stocks in a way. Yeah, when you
exactly.
Lend out your stocks.
Yeah,
it's a broker that's doing that. They do the same kind of thing, I guess. Right?
Yeah, and then, so the usage on just this use case of lending in the DeFi space 10x last year. It basically went crazy. So it was a huge
Yeah, I remember I
breakout
looked
area.
at BlockFi, I think a
Yeah.
few years ago, trying to lend out. I think my Bitcoin I was thinking about giving it to them for an extra 5% on that a year. That
Yeah.
was the rate back then. But yeah, so anyway, go on. What were you
Yeah.
saying?
So what
It's been
happened?
10x that opportunity.
Yeah, so what happened was just about, let's say, the past 18 months, mostly in the past year, there's been this huge jump in usage of kind of lending out. Before, DeFi was kind of limited more to like the exchanges. So you buy and sell crypto, whatever, right? Now it's extended out to the lending or of any crypto and the lending through these contracts, right? And then, so we're still in the early ages where now they're trying to layer more types of transactions, more types of collateralization. So basically, you could put all of your assets in the digital form. And let's say you have NFTs and you use it as collateral. Who knows? Whatever. Everything can be
Yeah.
linked, and it's all used in a trustless way. Meaning, once you define the terms in the contract in the program, that's it. It can't be changed. It's immutable because
Yeah.
it's on the blockchain. It gets rid of the inefficiencies of all these intermediaries and the whole financial system. So the promise of blockchain is like this revolutionary financial system, right? Without banks, without intermediaries. It's pretty bold of a
Yeah.
ambition.
I mean, I don't want to be that horse. I still have trouble with the DeFi being something like revolutionarily different in its own right versus what's already going on with like Ethereum and the smart contracts and lending out your Bitcoin. I feel like DeFi is just kind of like the new hot buzzword or something. I'm not sure I see it as a huge differentiator in itself yet. I just see it as like a buzzword for new innovations happening on top of Ethereum or, new crypto ICOs or whatever,
Yeah.
So that's just my point of view. Maybe I'm just slow to adapt on some of this stuff, but I've been looking at it for a long time, and maybe I'm just too skeptical. But the Elon tweet, "Don't DeFi." Maybe there's a lot. Maybe he's thinking deeply about what this DeFi movement is, or maybe he's just being playful. I don't know. It's just. I do think he's got something up his sleeve, to be honest, like we've talked about before. I think he's really got something cooking with this, Tesla coin or Elon coin. It wouldn't be Elon coin. It would be called like Tesla coin or Mars coin or X coin or something. But he promoted Zach to the master of coin and all this. So I think there's something up his sleeve he's working on. He's cooking up. And maybe it'll be his own, currency, smart contract, all in one. Maybe he's got something new. Maybe we'll all be surprised. Maybe it's just be like what he thinks is the best of everything combined into like some kind of crypto ledger, blockchain, smart contract that's easy to use, inflation built in, available to everyone, include some UBI into it somehow. I don't know. So there could be some interesting things he's cooking up. We'll see, I guess, right? But it's definitely something he thinks about.
Smart Focus on Twitter says, what would you invest in if you couldn't invest in Tesla, assuming it wasn't a publicly traded company? Another person asked, are there any companies you're betting on or you're getting more bullish on besides Tesla? So do you have any thoughts on that?
Yeah. I still have highest conviction by far of Tesla being the biggest company in the world, by 2030. That's what I've, kind of in my head at the latest. And that's conservative, I think, probably years before that, hopefully. But if Tesla was not an option, it'd be hard I'd have to diversify a bit more, obviously. And I'd probably be more in like ARK ETFs, to be honest, and trust their judgment or look at the stocks they're looking at carefully and decide which ones of those I'd want to be heavily weighted on. Or I've talked about the Motley Fool before. I think they do a lot of good stock picking, the founders in particular. And I'd look for some of their stocks they typically recommend and start doing diligence on them. Because, the universe of stocks was like thousands of stocks out there, like every day on Twitter. Now that I have a few followers, I'm being pitched all these different stock ideas and they all seem interesting, but I can't investigate so many stocks, right? So I'm looking for like the high quality people that I trust, whether it's ARK Investment or the Motley Fool founders or, a few people out there that I might follow on Twitter that I value their judgment, for example, or then I'd look into those stocks and decide for myself like which ones I think have the brightest future, largest total addressable market, the best founder that's most competent, that kind of stuff. It's a hard question though. Like I'm sure you've thought about it, right? Like if Tesla wasn't around, what do you think what you'd invest in?
Yeah. So sometimes I think like if Tesla wasn't around, I would have to actually like do a ton of work to,
Yeah.
like part of it is like I'm kind of, piggybacking on past work, meaning I've talked to Tesla execs, I've listened to every single one of Elon's talks and interviews, and I've tried out all of Tesla's products. Like I know their DNA, and I know I understand kind of the company in a way that's kind of profound in a sense. It's like a third child or something, It's like
Yeah.
that closely, right? And I think without that, then it's like okay, we have to do the work again and really go deep. I think before doing kind of more of a diversified approach, which I think is probably the default, which should be I find a way to invest into some private companies that I'm really excited about, like SpaceX or Stripe or a couple others. But I think I would do deep dives into what I think would be like the most kind of fast growing kind of interesting areas out there. And I would probably spend, 6 to 12 months actually diving into crypto more. And we talked about in part one, DeFi. I would really go into like every single player in that space.
All the aspects of it.
Yeah. And I would be open to starting like a fund, just to invest into crypto. If I couldn't find these stand out, maybe to get into one of these companies as an investor, I need to start a fund or something. But yeah, I would kind of blow up my whole investment model. I would just say it doesn't have to be stocks. It could be anything. I'd also look into real estate too. Like, I'm bullish over the next 5 years on certain markets. And so I would say, hey, what are some opportunities that can really do like, let's say a 5X over 5 years, is there anything out there? And I would just like meet with people, talk with people, email people, just do a complete deep dive, trying to uncover something, that might exist. But of course, stocks is always like, there too. So it would be, but what I'm looking for is that outsize, kind of like that no-brainer, like this is, going to be the next big kind of winner. And the thing is, what's challenging is you don't know if you're going to be able to find that with super high conviction. It's always that unknown where you can get to the end and you're like, oh my gosh, I don't know who's the winner of this. It's kind of like with genomics or CRISPR, like you can, maybe there is a winner, maybe there is but it's like, I've done some initial research and I can't find that breakout winner in that company. Yeah. So like Brent Winton in our interview, he was saying maybe the benefits of like a CRISPR go down to perhaps the comprehensive service, patient service, like a teledoc or something, right? That's able to leverage all of that, innovation and improvements. But yeah, you don't know how it's going to end. But yeah,
how would you learn about how would you like you said you do deep dives on industries or things that are changing that you're interested in? How would you learn about? How would you discover what you're interested in? Just reading the news, or like Twitter, or like you just come upon it randomly, or would you like look in certain areas to try to discover
I think
things of interest?
What I'm looking at is I'm looking for like crazy potential and growth. So something that's already growing like super fast without any intervention, just like it's going to happen. It's inevitable. But on the flip side, I'm looking for low attention or recognition of that opportunity by people. So I'm looking for that, that opportunity that's overlooked.
But how would you come across that opportunity? Is I guess what I should say. Like, would you just like naturally, do you think, come across it from news feeds you were reading, or like how would you like? There's so much information out there in the world, right? There's so many people pumping so many different ideas. Is you have a particular way you think you'd kind of come across it?
Well, so for example, like with crypto or DeFi right now, or let's say Austin real estate or something, those are already areas that I have a hunch that there's high opportunity and low recognition. But it's it's not, it's the specific opportunity though, I'm not connected with, or I don't know how to get that in the right way because I haven't spent the time to dive into it. Meaning, like, for example, I could get okay returns, I could I could do a 15% per year off of Austin real estate probably, or some other thing. I can double my money in 4 or 5 years, right? But I'm not really looking for that. Like, it sounds kind of crazy for most people because they're like, double your money in 4 or 5 years. That sounds great, right? I think ARK Invest, their kind of, their thing is they want to.
That's their benchmark.
Yeah, their benchmark is 15% per year, or double every 5 years, but for each stock. But like, I just think that there's certain opportunities that are higher in return that don't necessarily require that much additional risk if you're able to put in the work. So for example, I have a hunch that DeFi is low recognition right now because people don't understand it very deeply or clearly.
Like me. Yeah.
Yeah. Well, it's just natural. Like, it's really complicated stuff, it's just like, but there are these companies that are doing interesting stuff, but you need to go in and actually meet them and actually find out who these people are, find their stats, find their usage, and become a user. Kind of drive. It's like driving an early Tesla car. You've got to drive their products and really find out who is the breakout people in this industry.
Maybe my problem is I just don't trust myself with computers. I feel like, my computer breaks. I'm terrible at fixing it. If I lose a Bitcoin wallet, I'm like, I'm lost forever. So I have my Bitcoin cold storage. I'm terrified of crazy computer stuff. Maybe because I'm too, I don't know. Maybe my low confidence in understanding the fine details of computer systems and technology, maybe that's part of the reason I have a hard time grasping the mass adoption of some of this stuff.
Yeah, I think
because I just assume everyone else is like that. But
yeah, I think another angle though is a lot of it is management, is quality of the founders, kind of how they think and the superiority of the product. I think sometimes, it could be too complicated. And I think one angle you bring is you see that something needs that hit product. It needs to nail something in the head. People have to use it, and if it doesn't make sense, it's not appealing. So, I think there are different ways to look at it.
A real step change. It can't be
exactly.
some incremental improvement. It has to be something that people are like, oh, this is obvious. Why wouldn't I use it? Like the iPhone when people first did, or the Tesla people first drive it.
Yeah. Alejandro Utrera from Tesla says, or from Twitter says, if your starting line is $20,000 with today's market, so let's say you only have $20,000, would you try real estate, stocks, or startup? And what would you try to learn as well? Thanks, Dave and Emmett. Love watching you two provide insightful thoughts.
Yeah. I mean, I think we've been asked stuff like this before. It depends a lot if this 20,000 is your life savings, or if it's a play money account that you saved up $20,000 on the side to kind of learn how to you try to maximize it, So if it's your savings, obviously you have to treat it very differently, and you don't want to be too risky on it. There's much more, but if it's kind of play money that you can afford to lose, and you have some savings on the side that's separate from the 20,000 that you'll be fine with, then that 20,000, I feel like that's where I feel like you could do different. You could be more flexible in using that for different things potentially. Starting a small business, if you have a great idea and you think there's an opportunity, I think that's probably the best thing, to be honest. But you have to feel like you have a great idea that you're motivated to do, and you feel like you have some experience or some way to succeed in that, but if you don't have that confidence of starting a small business, then look for small businesses that you really like to invest in through the stock market. They don't look for businesses, not small businesses, whether it's some startup AI company that really well, then you think they have some real competitive edge, or I think you kind of do what Dave and I were just talking about, kind of figure out what you think, discover what you think is a big change in the future that hasn't been really hasn't been adopted by people a whole lot yet, and then don't front run it, but just be early to that with investing in a stock or some stocks that represent that kind of change, maybe. I don't know. That's if that makes sense, Dave. You might
Yeah.
be able to usually have good advice on this
Yeah.
stuff.
I mean, it's complicated because, there's so many factors involved, like, the age of the person,
True.
the goals that person, how high income or low income, the saving, etc. But yeah, with 20,000 starting out, one thing I would think about or consider is kind of the time frame and how ambitious I am. Like, for example, is this just kind of a retirement I want to grow slowly and just add to slowly over time? I think typically that's like a normal, stock approaching long-term buy and hold. You just kind of research the best companies. My suggestion is, try to find, generational companies that you could try and their products that you catch early on enough where this will, before it infiltrates culture and everyone uses it, right? Companies that have a potential to dramatically increase in their market cap or valuation and grow their competitive advantage. But then on the flip side, it's like, I think there's an interesting opportunity where it's kind of outside of the traditional, just like buy and hold, retirement, stock investing approach. And that is like to get dramatic gains, like to really like supercharge your investing. Where you are hyper ambitious. Like, you're not just trying to save for retirement, but you are trying to say, hey, I want to take this 20 and really max it out to, its potential. I think, and I'm willing to put the time in. I've got a lot of time. I'm going to go for it, whatever. I think in that case, like, buy and hold to me is a little bit, it might not be the exact right way unless you have high income and you're willing to just continue to fork in more money over time. Another approach is kind of, the challenge with buy and hold is the cycle time is kind of, it is long, meaning the feedback, it takes a while. Like, it could be 5 or 10 years. You could be invested in a stock and for 5 years it just goes down, and you're like
Tesla from 2014 to 2019.
Exactly, right. Or you invested, let's say, in the stock market in 2007, and you're like, and then in 2008, 9, 10, 11, it's just like you're flat for like 6 years, and you're like, what the heck, So it's tough because the feedback cycle would be so long, and you're just sitting there waiting. What are you going to do with your time? And so, in some ways, like, if you can have a shorter feedback cycle, for example, like in your case with options, or it's a little bit quicker, you can learn a bit faster. Or business, like, it's something like, hey, you've got a product, you're trying to sell something, you can learn that day or that week something, and then change something, and then do it again, right? I love that idea of like being able to make constant improvements, But yeah, I'm a big fan of the internet and of releasing stuff online that has low cost, but you could try out and just like iterate on it. And it's fun. I'm actually working on something right now. It's a kind of a I'm trying to help people research. I'm trying to help myself research, because like you're saying earlier, how it's hard to keep up with all of these companies or opportunities. It's like we're one person, you don't have like 100 hours per day. But how do you sort out all that stuff where you could find out the best people's like take on the best stuff? Like, you could really get to the essence. And so I'm working on this idea where you can install a browser extension, and then you highlight a paragraph or something that you're reading, and you can type a note and you save it, and then that gets saved under a ticker symbol, and people can then kind of join that community and then follow different ticker symbols, and then you can see all of the snippets that people have clipped from different articles and their notes, and you can follow people too, so you can kind of get a sense of what people are seeing, researching what they're thinking about different companies, trying to like streamline the whole research process. But yeah, it's a I've got
interesting idea.
Yeah, I've got a full-time developer who's been working on like this for quite a while, and we're trying all these different things. Like, in my free time, I'll just like, say I've got this idea, and then we'll try it. But most of the time, it doesn't work. And then, one of the ideas might work.
Well, just get one right, and then it'll be amazing.
Yeah, there's something about if you just continue to do it over and over and over, and you learn from your mistakes, and you continue to address the problem, like your odds can be actually pretty good, I think.
I agree.
Yeah. Cool stuff. Peter, actually, Will Chan says, actually, this is a new question. Thoughts on the Cybertruck pilot line in Fremont? Have you heard of that?
Yeah. I
Tesla
heard Rob
supposedly,
Maurer
yeah,
talk
yeah,
about it in his last update as well. And they have some extra space after combining the S and X on the refresh line. And I think that's good. Great news. They're just preparing to come out of the gates faster in Texas when it's ready by setting up some kind of pilot line in Fremont, and so that they can start producing and selling some Cybertrucks in the summer potentially. That'd be great. The first one's coming out in the summer, or the fall versus like the very end of the year, or
yeah.
early next year. So accelerating that timeline, it's a completely different product. I don't think it cannibalizes the S or the X or the 3, and that's also, it seems like it's bullish for the batteries, if they're scaling, they're more confident in how quickly they can scale up this new battery. I don't think if they saw delays in scaling up the new battery, I don't think they'd be doing that, right?
Yeah.
It's a pretty good sign, I think. Don't you agree, or do you have a different take?
Yeah, I mean, it's interesting because like they're doing this pilot line idea with the 4680 cells, right, at Fremont. So this whole idea of let's create something first and then scale it later. So it's kind of this new method that Tesla's trying out. But it's like I would imagine that they would have just tried to, in limited quantities, make Cybertruck like a few, and then try to hash out the process, the folding of the stainless steel, whatever, and try to work it out in Austin, with their production, et cetera. But it's like, yeah, it's an interesting take where you try to like not just make a few, but actually make a line that actually is putting out some.
Yeah, it's like the experience you're talking about, like you iterating and eventually something. So they're just forcing that extra experience by kind of doing a pilot line here.
Yeah. So I think it's great. And yeah, I mean, they'll learn a lot. It's way better than just waiting, to try to the end of the year.
A bear would, speaking of the bears and all that, their perspective would be, Tesla's must see weak demand for other cars, so they have too many batteries and they can't sell them all, and so they're gonna push this new product quicker so they can meet the supplies of they're getting of the batteries, which isn't that much or something. So that's what a bear's argument would be for that, I would imagine. But I don't think that's true. I think they have all these demand levers they can pull for their cars, and if they had so many extra batteries, they just put it into energy storage, big projects too, which might not have the same margin. But I don't imagine the Cybertruck's going to have some amazing margin to kick off either.
Yeah. Do you have a Cybertruck order in?
I do. Yeah, I have a Cybertruck order.
Do you have
I was hoping I'd get I was going to wait until. No, I think I got the mid-level one.
Okay, yeah.
The performance one, you have to wait like an extra year. So I just wanted to get I wanted to get like one sooner. So yeah, I'm supposed to get this S refresh sometime very soon. And I was hoping to have that for at least a year before I traded that in for the Cybertruck, but maybe I'll have that less, or maybe I'll delay my Cybertruck order. But I feel like I got to be one of the first ones in my area with a Cybertruck.
Yeah, I mean, just keep.
Got to pull up to my kids' school with that. Like, here you go, kids.
Yeah, I mean, just keep your S for a while and just get the Cybertruck, I think. Yeah, definitely. Yeah. Did you hear about the whole leaked conference call where Elon said that they had a chance of delivering or producing and delivering 1 million cars? Like, what did you think of that?
I mean, I always thought that was the case. I mean, from the beginning, before that leaked call, though, I started thinking maybe that's not going to happen with the depressed Q1 deliveries. I was thinking, maybe 1 million's too high. And now Elon's saying that, but he you got to know, like, I don't know. Do you think he thinks the details of this call is going to get leaked? I mean, every email he sends, he knows it's going to get leaked, right?
Yeah.
But do you think he thought that the details of this call would get leaked? I think he probably assumed it would, right? What do you think? I don't know.
I mean, so my reaction to this whole thing was, I heard that and I'm like, oh, that means Tesla isn't going to deliver 1 million cars.
And they're going to be late. That's what they're aspiring to. But
the reason being is because Elon's saying they have a chance, meaning that if everything goes right,
Yeah.
it's an internal kind of stretch goal, right? So
But he's done that
everything.
with like a chance to be profitable, and they were, right? Or
That's true,
things like
but
that.
something like so far out, it really means that a lot of things have to play out, which it
Yeah.
almost never happens that way. Like there's
Yeah,
always
like Berlin
problems.
has to get up on
Yeah,
time and like start ramping
everything has to be
quickly. And
perfect and better than perfect, So yeah,
yeah,
I mean, Tesla's not going to deliver a million cars, in my opinion,
yeah.
like this
The
year. It's
coolest
just
thing from that call was the leak that he said something like the next 3 years are going to be wild or
mhm,
something. I forget the terms that were just got. But if you listen to that Rob Maurer,
mhm,
he does a lot of good daily updates. He gets
mhm,
good information and was talking about it. But yeah, something about like the next 3 years are going to be insane or something,
mhm.
Elon just is always a pep rally mode. I feel like a lot of times, so it's hard to know if he's being like super pep rally with his own employees or if there's more to it. And he was, and then he tweeted about like probably a few months Tesla would be the biggest
Yeah,
company in the world. That's pretty crazy, but there could be some crazy, things up his, surprises with this super, fast rollout of this full self-driving beta really improved fast. And,
mhm.
it's hard to say, like, is he being just extra optimistic and like he has been in the past about certain things? I remember at the full self-driving event you went to, the
Mhm.
autonomous day, he said like next year we'll have 1 million robo taxis or something. And obviously he'll deliver on that, I think, but it's just
Yeah,
going to be a few years later than he expects. So it's like, is the next 3 years going to be amazing, or is it really going to be the next 6 years that are amazing, and years 2 to 5 are the ones that are amazing, not this year, next year? So Elon time is hard to judge, to be honest. It's
yeah,
like things he says usually come true, sometimes in the time he says, but a lot of times it's late.
yeah,
Just how late?
yeah, yeah, exactly. I mean, I think, yeah, the more experience you have, like you have a lot of experiences where the timeline is, later than what was anticipated. But
Mhm.
then there are certain times where it's like, hey, it's like actually happens, like for example, the
Yeah,
Shanghai factory. Um, and
yeah.
yeah, just like,
Sometimes
the
it's
Model
earlier.
Y,
Yeah,
came out
yeah,
earlier than expected too. Um,
yeah.
yeah, it's interesting stuff. Um, Mark Paddy on Twitter says he asks us to discuss ARCX. The released a new ETF on space today. Mark is asking, is investing in the space sector worth it if you can't invest in the obvious number one, SpaceX? Um, and then Reinvented Real Estate Inc. says, hey guys, love your chats. Any chance you can comment on ARC ETF, the recent ditch of ownership caps and what that might mean for ARC's largest positions, given the current market lows? So yeah, there's been like I think ARC Invest in their last perspective, they might have removed the 30% limit that they've have in their
Yeah.
perspective. But the thing is, ARC has this internal kind of guideline that they use that isn't published, but they don't like to go above 10% in a fund for a single stock. And some people are speculating that maybe that they've changed it, but I haven't seen any indication that ARC has actually changed that internal guideline higher than 10%. And my opinion is I don't think they will actually for most of their ETFs. I think the space ETF, it's an exception if they can get into SpaceX, which
Starlink or
yeah, I don't know. I
SpaceX
don't
or
think they can
something.
get into
Yeah.
SpaceX because it's a private company. I don't know how an ETF will work like that. Um,
I think. Oh, I know like mutual funds can. Yeah, ETFs. I don't
mm,
know, to be honest.
yeah.
Yeah.
But yeah, if they can get to Starlink, then maybe they want to go higher, and do a big,
Yeah.
huge position. But yeah, I think unless it's a crazy opportunity, I think ARK is happy to just keep 10%, a little bit more, with Tesla, for example, in their funds. I don't anticipate them going much higher. What are your thoughts?
Yeah, I think that they put that in there to like give themselves the option in the future if they see like,
Mm,
let's say Tesla gets cut in half from poor delivery numbers, and they're like, oh, this is too good of an opportunity. We got to load up on Tesla at 350 or whatever,
mm,
like I think they would do something like that maybe, and it gives them the option to do that now, whereas before maybe they didn't really have that option. So um, that's maybe the purpose of that initially. I'm thinking for special situations. Um, the space ETF, is exciting, and that it's like, there's a couple other of these space ETFs out there, I guess, but ARK Investment, they're a name brand ETF issuer, and these days, and them having they have a lot of clout with their stock calls. I looked at the listings of the holdings right now. There's not a whole lot of good like space specific, in my opinion. There's like 3D printing, there's like satellite companies. So it's all like there's nothing like SpaceX in there, obviously, right? I was wondering if they'd like get the Rocket Labs SPAC or something, because I know they also said they're allowed to invest in SPACs, or they reiterated that as well. But there's probably going to be more space related SPACs as well that they'll be interested in. So over time, there'll be more like pure space plays, I think, like in their ETF. But right now, it's still early days, I guess. Yeah.
Yeah.
We'll see how it develops.
Yeah. I was looking at their holdings, and I think Trimble is their number one holding. So I was like, what the heck is Trimble? So I was looking at their, investor presentations, trying to figure out this company. And their second, holding is their 3D printing ETF, ARC's ETF. And there doesn't seem to be, that breakout space, player or players. But on the other hand, I was thinking maybe ARK Invest is, looking at it as an alternative to, let's say, the S&P 500. Let's say you believe in the sector space, you think it can beat the S&P 500 over the next 5 years or so. Maybe you want to put some money into the space ETF. So I don't think that they're necessarily looking for 5 or 10x gains. They're just trying to, I think, give an alternative for people.
They're looking for companies that are exposed to space, the space industry.
Yeah. So I think, with that mentality, I think, that's the fund that they have given. And I think they want to prepare themselves to like get into a Starlink or, something else like SpaceX in the future.
Maybe they'd put 30% in Starlink or something, right?
Yeah.
So it could be
definitely
one of those special things.
Yeah. Fun stuff. Ned Basher says, do you think your kids will ever drive a car, or will it seem like madness to allow human drivers by then? What are your thoughts?
Yes. Yeah. I mean, I think my kids will never drive a car. I think it'll still be available for, my oldest is 8, so another like 8 years or 9 years, 8 years, I think he'd be eligible for like a license or a permit or something. By then, I'm pretty confident, Teslas will be self-driving, and there'll probably be some other brands self-driving by then. I would think 8 years from now, catching up. So I think most people would not want their kids to drive, given how reckless kids can be driving, especially in the day of cell phones and texting and such. So I think, most people prefer their kids are in the cars that drive themselves, whether it's a car that they own themselves, or whether it's, a robotaxi service they give their kids access to use anytime they want. That's what I think. I think it'll be crazy in like 10 or 15 years. It'll probably be seen as crazy, to drive yourself, maybe 15 years, but I think it's a thing of the past at some point, and people will say, I can't believe we drove those crazy death machines all over the place, I think Elon's talked about it in the past a few times too. Do you think your kids are going to ever drive, or would you let them drive if they wanted to?
Yeah, actually, I'm kind of more open-minded. I think like they're gonna not drive, obviously, because the car driving for you in 5, 10, actually 10, 15, actually my kids are 3 and 6. So yeah, in 10 years, it'll be far, far safer than a human driving by orders of magnitude. So it would make sense for them not to drive, but like, I want them to have the option to drive at times.
Experience.
If they want to. For example, like I remember back in the day, when I was living in LA, I got like a second car. So I picked up it was a 1991 Mazda Miata, and I picked it up for like $1,600, and it needed a new top, but otherwise it was like a fantastic car. It it was a 5-speed, and it drove great. And I remember I loved that car because it was kind of like my second car. But I would take it to the beach on like there's like PCH1 on Santa Monica, so you could drive this car on this kind of curvy road overlooking the ocean and the sunset.
Oh,
And
it's nice.
yeah, so I would just like take this car out to the beach like every week, and I would have my rollerblades just stuck in the trunk, and I have like a parking spot, and I rollerblade and take the car back. But it's such a surreal experience to drive like in a convertible with the sunset overlooking the ocean, the
Oh
breeze,
yeah. I've
and
done that once or twice and it's amazing. Yeah.
yeah, it's crazy. And I think, yeah, robotaxi or whatever, if a self-driving car, I mean, I don't think you get that. And there's something like, I don't know. I mean, I wouldn't say it would be sad, but I think humans should be at least given the opportunity to,
Yeah. And we do
enjoy stuff like
inherently want
that.
our kids to like experience the same joys we had growing
Yeah.
up. It's just part of who we are as parents. We want them to like do some of the same things we did growing up
Yeah.
and so I think we'll probably want our kids to experience it to some degree too.
Yeah.
Yeah.
Unless people outlaw it and say, no,
Yeah.
like that guy's
I
driving
don't
by
want
himself.
those.
It's like
Yeah.
you get
Yeah.
pulled
Yeah.
over just
There's a
for trying to
driver in
drive.
that
Exactly.
car. Pull it over.
Yeah, exactly. It's going to be crazy. Awesome.
Cool.
Emmett, have a great week, and we'll talk to you probably after you come back from your vacation. And yeah, good luck.
Sounds good. Thanks, Dave.
All right.
All right.
I'll
Talk to
see
you.
you. Bye.